Hello, David here at merchantaccounts.ca. Today I have a quick one. It's advice for how to get a merchant account if you operate a business in the construction industry. Stay tuned, we'll dig in 1 second. If you run a business in the construction industry, it might surprise you that you actually do have a little bit of a higher risk business in the eyes of the payment processor. And there's really two reasons for that. One, construction is one industry that tends to have more disputes than others. And that can be because also people's demands can be perhaps unreasonable at times. And also, I don't know if there's a secret, but not every contractor out there does great work. Sometimes people take on a job, they kind of leave it half finished. There are disputes that happen. That is just one of the risks associated with your industry. It's no fault of your own as the merchant. Now, the other problem with construction is that people take payment today for a service that is rendered in the future, which is related to the point that I just made, but it's a specific risk that's studied very significantly. So if you're a contractor that does decking, maybe you build patios or porches or something like that, your policy might be to take half of the payment up front, the remaining balance upon completion of the job. And you might be very busy, you might be a very in-demand operation, so you might be taking payment 4 months in advance or even 6 months in advance so people are ready for the upcoming summer season. The problem is, because you're taking payment today and the service is not being rendered until some point in the future, it raises something called future delivery risk. One of the core and principal protections built into credit card processing is, as a cardholder, when you pay something, you're absolutely guaranteed to get it. Come hell or high water, you are getting what you paid for. And if for some reason you don't, you get your money back. Now, when you get your money back, it has to come from the merchant. In this example, this fictitious construction company. But the question, what happens if that construction company goes out of business and they don't have the money available to give back to the cardholder? Well, it doesn't change the fact that the cardholder has to get their money back. So what happens in these cases is it actually comes from the payment processor's pocket. The payment processor must take the money out of their own, they must finance it themselves and give it back to the cardholder. Now, that is the reason that a lot of construction companies often have rolling reserves or holdbacks on their account and are conceived, it's not high risk, but it's more like mid-risk, moderate risk. And you don't want that. You want all of your payment, when you process a payment, you want all of your money tomorrow. The way that you do that, there's two ways to do it. The best way that you can do it is just be a stable, reliable company that's been in business for a long time, and you have money in the bank, you have financial statements for your company, you can show that you're in good financial position, you're not going out of business, you're not going anywhere. However, not every construction company or contractor is in that situation. So what do you do then? Well, if you're in the situation where you can't rely on your business history and financials, you can try to, as much as reasonably possible, minimize your upfront deposit and charge more of the money much closer to the date of the work beginning, or ideally when the work is ended. Now, I realize, and I'm trying to be very direct and transparent about this, that is also an unreasonable thing that you can't completely accommodate. Depending on the job, you might have a lot of material costs. You need to buy supplies, you have staff, you have insurance, there's lots of operating costs. So it is reasonable that you need some cash flow, of course. The hardest time is in the very beginning when the business is young. All I'm trying to say is, if you can, to the extent that you can comfortably operate, minimize the amount of money that you're taking way out in advance and maximize the amount of money you're taking very close to the beginning of work or stage payments, it helps reduce the risk. And finally, work with a payment processor that can be flexible and can work with you. A lot of time, big payment processors are not as good at working with merchants with unique situations or where you need to prove yourself over time or build that relationship. At merchantaccounts.ca, just as an example, we love working with contractors, and I think all the things that I've demonstrated in this video explain that, because we get that you need money, you need cash flow, but at the same time we ask, hey, just understand we don't want to be left holding the bag if everything goes sideways here. So that's generally the best advice that I can give you. In summary, the problem is that contractors sometimes have a bad reputation. This has nothing to do with you, it's just your industry. And two, you separate yourself out with your business history Ideally, you minimize the amount of money you take way in advance. You take more closer to the date of when the service is rendered. And then if you do have a strong business history, absolutely talk about it. Prove it by providing your financials. Do a cover letter about your company where you're explaining your accolades and your history. And I don't think I need to go on any further than that. If you have a construction business or any type of business and you might like to get a quote, please do reach out to us at merchantaccounts.ca. Thanks for watching and have a nice day there. Bye now.